Hello friends, in this video, I will share a trading strategy that I have been using for a long time and have even significantly increased my capital. I will try to teach this strategy in two different ways, because the model I will show in the second stage will be more professional. First, it will be applicable to beginners or those who want to make profits in a very practical way. In the second stage, we will trade metrically by incorporating Fibonacci ratios into the strategy. Let's set the settings of the two free indicators we will use in our strategy and get started. Of course, as always, I ask you to click the like button. I will not have any other requests. I need to mention an important point that you need to be very careful about when setting up. I marked the timeframe section of our relative vigor index indicator as for hours. Why? Because we will be working on a 1-hour time frame. Whatever time frame you will trade on, you should increase this section by 2, 4, or 8 times. For example, if you will trade on a 1-hour period, you can set it to 2 or 4. If you will trade on a 2-hour time frame, you can set it to 4. This way, the RVI indicator will move a little slower and show us the direction of the trend more clearly. Since I usually do scalping on a 15-minute chart, I changed this setting to 1 hour. In my super fast 1-minute trades, I set it to 3 minutes. In short, adjust this section to a few times higher than your trading time frame. Let's move on to the trading rules. Let's look at examples of long positions. Rule 1. The price must be trading above the Ichimoku clouds. In the recommended trading model for long positions, it is preferred for the price to be above the green cloud. But traders who want to take some risks may not care about the color of the cloud. However, for a long position, it is necessary for the price to be trading above the clouds. Rule 2. The green line of the RVI indicator must cross the red line upwards. Rule 3. An entry is made when the indicator's upward cross movement coincides with or is followed by a voluminous green candlestick that closes within a maximum of 4 candlesticks. The stop loss level should be below the last swing, and the target level is 1 to 1.5 at the trader's discretion. The position can be closed entirely at this level, or they can continue by taking some profit and moving the stop loss level to the entry point of the trade. Let's take a look at some examples of long positions. To reinforce the rules, price must be trading above the Ichimoku clouds. The green line of the RVI indicator must cross the red line upwards. An entry is made when the indicator's upward cross movement coincides with or is followed by a voluminous green candlestick that closes within a maximum of 4 candlesticks. Now let's quickly look at a few more examples. I don't feel the need to repeat the long position rules, because I'm confident you've learned them easily. If you had any questions, please write them in the comments section. Also, I recommend that you watch the video without skipping because we'll improve this strategy a bit more after studying short position examples. Now let's look at some short position examples. The price should be trading below the Ichimoku clouds. For short positions, it is recommended to trade below the red cloud. But traders who are willing to take higher risks may not consider the color of the cloud. The green line of the RVI indicator should cross the red line in a downward direction. A voluminous red candlestick should appear either at the same time or within 4 candlesticks after the RVI indicator crosses downwards. Enter the trade at the opening of the next candlestick after the conditions above are met. Set the stop-loss level above the most recent swing high. The target level is 1 to 1.5 risk-to-reward ratio. Traders can either close the entire trade or take some profits and move the stop-loss level to the entry point. Let's work a little more and take our strategy to the next level. I fast-forwarded the examples to save time, but as you noticed, in this example, even though the trading conditions were met, our first entry touched the stop-loss level. However, the trading conditions were met again within a short period of time, and this time, we hit the target. Please remember, a strategy that always results in absolute profit in every trade has not been found so far, because there is no such thing. Acting disciplined, patient, and following the rules consistently will always increase your capital. This is the only certain thing. Yes, now let's change the shape of our strategy a bit. First, let's take a look at a short position example. As you can see, the Ichimoku cloud is constantly green and the price is climbing upwards. First, we will wait for the cloud to turn red and draw a trend line from the bottom to the top. When we see the red color, after the trend line is broken and the price falls below the red cloud, we will wait for a pullback towards the red cloud. And now we draw the Fibonacci tool from the high to the low. Our target is the Fibonacci 1.618 ratio. The stop-loss level should be above the last swing high. Congratulations, my friend. You have now learned professional level trading. Lastly, I will show an example of a long trade by adding a small detail. By the way, you can join my Telegram channel where I share many educational content, such as currency pair analysis, comments, trade examples, and my profit, loss trade results. I will leave the link in the description section. Ichimoku cloud appeared green. Price made a retracement towards the green cloud. We will draw a resistance line at the highest point. We also draw the Fibonacci tool from the bottom to the top. This time, since we will enter the trade after the resistance line is broken, our target will be the Fibonacci 2.618 level. Entering the trade after the break of the resistance line is generally preferred by professionals because it provides a final confirmation. As you can see, the level of 2.13 was our partial profit zone. At this level, we moved our stop loss level to the entry point and the market came back, causing the trade to close. Again, we were able to keep the profit in our pocket. That's enough education for today. Goodbye.